that was like a disaster for me. So I'm like, is this company listed? Because I do quite a lot of scatterbug. Then I just went to search, and to my surprise, it's listed. They went from $1 plus all the way to I think $5-6 now.
Hello, and welcome back to another episode of the VUCA Insights podcast, where we talk about investing, entrepreneurship, and a growth mindset. Today, I have someone in the Asian small cap space, and it's very interesting because he used to do fund back end operations, which I'm going to ask very much later. He has now, taken the leap of faith to come into the world of content creation, writing, instead of holding down a steady job, especially in Singapore, right? And my guest today is none other than James Yeo, or better known as Investkaki. Thank you so much for coming, James.
Hey, thank you, John.
Yeah. So, first off, what was a 15-year-old James like? What was he interested in? What did he used to do as a hobby?
Okay, well, 15 years old is quite long ago. Personally, for me, I do like to play a lot of games. So 15-year-old, if you were to bring back my memories, I'm actually playing Dota.
Oh, Dota. Okay.
Yeah, so DOTA, right?
Yeah.
So I'm crazy over it. And the funny thing is, I actually wanted to join those esports competitions, because I was
Okay.
so crazy about it. After secondary school time, I would just rush back home and play or go to the LAN shop. Last time we still have LAN shops, right?
Ah,
So we will go with our friends, we will play until night time, don't want to go home, don't want to study, just play Dota. So
okay.
that was back in when I was 15 years old.
Okay.
Yeah.
Your parents didn't like say, "Hey, James, what you doing with your life,"
Well,
kind of
because
thing.
my parents were busy working,
I
so
see.
I'm quite free in that sense, independent. But luckily, I didn't go off the track lah. So
Okay.
I'm still quite obedient and still study for my O levels.
Okay.
And because from young, I have this kind of entrepreneur mindset that, or maybe not entrepreneur mindset, maybe just money minded. I just want to
Mm,
earn my pocket money.
mm.
So I will always go work part time
I
after
see.
my my playing and all that, right? I will go to because I was a sales promoter
Ah,
in the early days
I see.
when I was studying poly, and then I will be selling printers, selling MacBooks. I still remember the commission for selling MacBook is actually the highest among
Wow.
all the other products. Yeah.
So I'm pretty sure you sold a lot of MacBooks back then.
It's auto selling, It's
Yes.
I don't have to do a lot of promotion. People come, I want to buy one MacBook. Okay lah.
Yeah.
Then I just bring to the counter. Then I can earn my commission.
Yeah. Actually, it's so interesting that you mentioned this, that the product sells itself, right?
Yeah.
And in a way, your customers that come when they want to buy a MacBook, they've probably studied it inside out, a Mac enthusiast, and it's like
Yeah.
wonderful business to invest in. So
Correct.
what actually sparked your interest? Because you started your career at Citco and Citibank, but before that, what actually sparked your interest into the finance industry? Was it a role model? Was it something you read online, or what was your anchor to that? Uh,
Okay,
Very
very
early.
nice question. So the spark that actually came to me was from my dad. So he
Ah,
used to he's also an investor,
okay.
or I would say speculator lah. So he would turn on the TV and look at the teletext. So
Oh
last time,
yes, those days teletext.
those days, you have the tickers on the TV, and then they will blink. Green is going up, red is going down, and then I was quite curious back
Mm,
in the days, right? When I was still quite young, I was looking at the TV, and I see him just sitting down and then looking at the TV. Then I asked him, what is it so nice about looking at these numbers going up, going down, and what is this blinking all about? So he just tell me that if it's green, then I make money. If it's red, then I lose money. I'm like, wow, you can earn money sitting down and looking at the TV. So that sparked my first tinge lah with investing.
I see.
Yeah.
I see. So did your dad actually share his, somewhat of a investing method or philosophy that you could leverage on in a way?
No, so actually actually in a way, right, because he was actually trading the markets, and most of the time he let his emotions get into the way lah.
Mm,
And I figured it out quite long after. So because when I was starting the brokerage accounts and everything, because it's free, so
mm,
I just put in some money from my pocket money, and then when we started off, we will be like, following maybe the top 20 volume, the kind of thing. Go up, then you become very happy. Go down, what happened? Then you go and search the news and everything. So that was how I got started,
I
and
see.
it's in the wrong direction in the sense that you're just trading without any research and just speculating, like, in a sense. Yeah, yeah.
Yeah, okay, okay. Cool. So you started your career in
Mm,
Citibank, then MUFG, and you were doing a lot of the hard work that most people outside the industry looking in don't see.
yeah.
Those fun admin work, like NAV calculations. If you tell me today, right, you ask me to do it, I think you better take a gun to my head. Right. So in a way, what was your biggest takeaway, and what would how would have the market evolved? Has it been evolved to a better system, or do you think it's still very traditional in its way of calculating, index based and all that kind of thing? Share with us
Okay,
the
thanks
experience. Yeah.
for the question. So back then, when I was in the hedge fund administration space, right? So I'm actually looking at all the hedge funds, how they are trading the markets and stuff like that.
Mm,
And the main key takeaway I have is that, like, every time people talk about hedge funds, you would think that, wow, they are earning big bucks, they can outperform the market every single time, every single year. But when I'm inside, the reality sets in is that most of them actually, after the fees, after the performance fees and everything, they are actually underperforming the market index. So,
mm,
so that was what really um, sparked my curiosity, in the sense that even the big boys who have all the resources in the world, they cannot outperform the market.
mm,
So is there a better way of doing things?
mm,
Yeah, so that's my biggest takeaway, and that actually combined with my own curiosity on small cap stock, right?
mm, mm,
Because I used to write freelance for a lot of financial publications,
mm,
like Dollars and Cents, Yahoo Finance, and the most important one is Motley Fool Singapore.
mm.
We actually came to Singapore back then, and I was the freelancer there.
I
So I
see.
have to, you know, do a lot of research on small cap stocks, and that was what really triggered my interest. Then that a lot of people, they don't really look at the hidden gems. They always tend to
Mm,
look at just blue chip stocks
mm,
or REITs. But I find a lot of value inside this pool of small stocks, and
mm,
that's the reason why, I'm and also maybe because I'm able to generate alpha lah, which is
mm,
when I invested in them. When I compare, right, me investing in maybe those blue chip stocks versus me investing in small cap stocks, I'm able to make more returns in the small cap stocks. So that
mm,
is I mean how I shifted from my mindset
mm.
working in the hedge fund admin all the way to the small cap stock space. Yeah, yeah.
Understand, understand. And obviously, there would be advantages that you would have because liquidity and market depth is not so much of a concern when you're
Mhm.
smaller
Yeah,
versus that of
correct.
a hedge fund.
Yeah.
And also because, in a way, if you spend more time, and correct my assumptions if it's wrong, you get to spend more time diving a little bit deeper. Whereas hedge fund, even though they have big resources, right?
Mm.
Correct me if I'm wrong, a lot of time is actually spent stakeholder management, board meetings. A lot of these, in a way, take their eye off the ball in terms of generating alpha, which is like pure on the ground kind of digging out of curiosity. Would you say that that would be your advantage because of what you did for Motley Fool and all that kind of thing,
Yeah,
comparatively to the hedge funds?
yeah. So I would say that the biggest advantage is that I'm able to hunt in the space that no one else is hunting.
Mm.
Yeah, as opposed to, you know, when the big hedge funds, right?
Yes.
They have hundreds of millions of dollars, and what they are looking at is, you know, the same pool as what the index is investing in. So
Correct.
unless you are more concentrated,
Yes.
which generally they tend not to be very concentrated.
Mm.
They have to, you know, answer to the stakeholders, the investors, that okay, maybe I'm in a basket of at least 50 to 100 stocks, and when you're in that many number of stocks, is pretty hard. You must be I mean, your bets must be correct in a lot of stocks in order
Correct.
for you to really outperform the market. Yeah, yeah,
Correct.
I
Correct.
would say
Correct.
that. Yeah.
Yeah. And also, I think drawdown is another issue, lah. But I think that will be diverging into another direction. But let me come back to um, small cap Asia. Probably you started 2015. Probably two questions: why Asia, and maybe concerned about small cap, because you already mentioned earlier that this is a place where less people are hunting.
Mm,
But
mm,
what are, in a way, probably either value traps or
mm.
maybe corporate governance issues that you see small caps not doing as much as a larger? Why Asia, and what worries or risks of small caps?
Okay, thank you for the. Okay, so you have two questions, right? Why
Mm.
Asia? Let me answer that first.
Uh,
I mean, Asia is because I think it's very easy to answer lah, because
mm,
I've written a lot of articles in Singapore and Malaysia, but
mm,
I'm not familiar with other small cap stocks in US. I mean, I tried it before,
mm,
and I think the market is big enough for US big caps, or rather mid caps, in a sense that the small cap stocks over there will be at a disadvantage lah, as compared to, you know, the mid cap and the large caps in US, because the market is so big over there, and they are so they have global operations. So
mm.
like, for example, you know, when you talk about Apple, Amazon, they are so big and they can continue growing in that big market.
Correct.
Whereas for Singapore, maybe Asia, specifically in Singapore lah, small cap stocks is, in a way, I feel that, if let's say we talk about maybe just one example, like Jumbo Group.
Mm,
So if they IPO with maybe five chili crab restaurants, so I can roughly gauge to my best estimation, right? Okay, maybe Singapore got how many shopping malls? Then if they open one in every shopping mall, then how many can they open before? You know, like let's say I buy when they have five restaurants and sell when they are around the saturation point. So that
mm,
is how my so-called, I would say that my familiarity and my expertise comes into play lah.
mm,
And that is the reason why Asia.
mm.
The other thing about value traps is that, yes, Singapore got a lot of value traps, in the sense that when you see Singapore, we all our delistings are more than our IPOs, right?
That's an interesting insight. Yeah.
Yeah. So a lot of the I mean, the management teams are, I mean, you cannot blame them as well, because our Singapore market tend to be quite boring and focus
Mm,
on the dividend paying side of things, and hence usually they are quite undervalued already, like maybe price to book maybe just 0.5, 0.6 times, and the management can say that, after maybe 2, 3, 4 years, we still don't see any trading volume, and we want to just, you know, delist the company, take over with maybe just a bit of higher premium, like maybe
mm,
10, 20%. It's still below the price to book ratio, but
mm,
I mean, it's like you're going from very undervalued to just a bit undervalued, but it's
mm.
still undervalued.
Correct.
And this is kind of the value trap, very prevalent in Singapore, because
Mm,
a lot of management teams, they tend to lease. Okay, I mean, generally, like my
mm.
consensus, my personal opinion is that they tend to lease to get the money, and, you know, like maybe get the branding or things like that, and then they were like that. After a few years, the market is not doing well. My share price is not doing well. I'm you know, taking
Privatization.
over privatization. at even lower than the IPO price. So
Correct.
it's like they are, for the management point of view, right? They are buying low, right? They privatize low and selling high at the IPO price, which
Correct.
makes sense to them, but it
Correct.
doesn't make sense to the retail investors.
Correct.
Yeah,
Correct.
I think
Yeah.
that is the key point lah for value traps in Singapore.
Understand. I think it's prevalent for most emerging markets, especially in Asia, where it's very predominantly family run.
Yeah.
Yeah, because I think what they sometimes lack is the depth of management and
Right.
value creation, because second generation may not want to take over, and then there's a little bit of a mistrust on getting
Yeah.
professional help, and all this,
Yeah.
right? So um perhaps then, looking at what you just described,
Mm.
have you evolved your investing philosophy over time? Because, like, I'm pretty sure there were certain blind spots that you had to go through, and
Mm.
from those blind spots, did it like enhance your investing philosophy and your checklist and all that? Perhaps share, how has that evolved over time?
Yeah, thanks.
Yeah.
So over time, right? I mean, in the first place, when I am reading about Warren Buffett, Benjamin Graham. So Benjamin Graham is very focused on the net assets
That's right.
and below the NCAV.
Yeah.
And back then, when I was looking at small caps, I was like, wow, this one, the net cash is even more than the market cap itself. So it's like definitely a bargain. But along the way, I would say that even if the share price is trading below maybe the NCAV per share, right? If there's no catalyst involved, there's no growth in the company and all that, it will just stay stagnant like throughout the 3 to 5 years. And the biggest what I would say, the negative part lah about this is that my money is stuck there for so long, and there's the opportunity cost, like what Charlie Munger say, right? It's the
Yeah.
opportunity cost you have to factor in as well. So um over time, right, I realized that I need some catalyst involved, either through,
Mm.
you know, it can be cheap, but there must be some either growth prospects. I can, have some visible growth prospects
Mm-hmm.
that can catalyze the market, can catalyze the stock, the company itself, or maybe it's downtrend for quite a while, and then suddenly it moves up with a huge volume and things like that. So, and maybe even the change of the new management team,
Mm-mm.
like for example, Citrum, which, yeah, I think I cover a lot in my videos, something like that. So there must be one catalyst, even though it's cheap, but I still want another added boost, a
Mm.
bonus to move up the share price. Yeah.
Understand. Um, Perhaps to dig deeper on your answer, which is a great one,
Mm.
in terms of the catalyst, because like today, if we look at some of our common friends, very big into Hong Kong markets, depressed PE, depressed book value
Mm.
valuation, and then there are times that if you shop in the big US markets, to find a company with net cash higher than market cap is it's almost a rarity because the
Yeah.
efficiency of the markets, right?
Yeah.
Uh, how long would you give it before that catalyst? Because a catalyst is something that may or may not happen,
Right.
and it's our jobs as stewards of capital to try to
Mm.
like make an educated guess or educated
Mm.
probabilistic guess when that will happen. So what would be, in your way, a rule of thumb kind of period before you allow that catalyst to happen, or does not happen, then you cut and you move on?
Oh, that's a very nice question.
Yeah.
So, based on my experience, is that because I usually look for visible growth prospects, that means I know that, okay, maybe the order book is increasing, or there's some signs when I read the press releases, the management is very positive about the upcoming, like maybe next few quarters. So I tend to give it 1 to 2 years, max 2 years. If the share price still stagnant and all that, maybe I will send an email to the IR and I ask, what actually happened? Is there any follow up on the order book? Are the profits increasing? What can I expect? And if the answer I get back is kind of subdued, like muted, right? I would say I would just change to another promising other stock.
Understand. Great. Um, I read through briefly your blogs and all that kind of thing, and I find that correct my assumption if it's wrong. You don't really have a very specific niche or sector. You do cover. So am I right to assume that you see yourself as more of a generalist, or rather, do you favor specific industries?
I would say I'm a more generalist.
Yeah.
Yeah. And if you look at my blog, right, you see that I cover a lot of REITs. The
Yeah.
reason is because Singaporeans all like REITs.
I understand.
And if I cover all small cap stocks, nobody is gonna read my blog. So I mean, I have to give what the market wants.
Correct.
That's the reason why. But it's not like I've given up on small cap stocks. I do the research myself on small cap stocks, and I've invested in a few. Yeah.
Understand. Perhaps a follow up on that. If you were to look back at your Citco, Citibank, MUFG kind of experience versus how you do research for Small Cap Asia, or how you do research for Motley Fool, perhaps can you share with us what were certain best practices that you felt that the hedge funds are not exploiting, but you can as a small cap investor?
Yeah, I think I've written it about this quite a few times before, in the sense that when you look at small or rather mid cap stocks, the thing is that it's generally undercovered by the analysts, by the bigger investing community.
Mm,
And the hedge funds, they have a huge pool of capital. They are not able to just maybe invest 10% in a small cap stock, or rather, if they want to make a meaningful return on their capital and they were to invest in small cap stocks, they will just buy it outright.
correct.
So it doesn't make sense for them. But for us as retail investors, like what Warren Buffett said, if you have small sums of money, right, he will work with, small value stocks, because that gives a big room for growth, lah. I
Yeah.
would say. Yeah.
Upside. Yeah. Okay.
Upside.
Cool. Like what you said, for the REITs part of your blog, you covered mainly to cater for the Singaporean market who wants some kind of a dividend yield.
Yeah.
Yeah, right. They don't want that kind of volatility. They like that it's asset backed and that kind of. But over the long term, obviously, Singapore is quite vibrant. The REITs market, you got guys like Ascendas, industrial REITs. I mean, you guys kind of like pioneered the REIT market for Southeast Asia, right?
Yeah.
But going forward, what do you see the landscape for Asia? I mean, I don't know whether you've done benchmarking for, I think obviously Malaysian REIT comes close to what Singapore REIT is doing. But what about emerging markets like, like Vietnam, like Cambodia and all that, or even the Philippines? Do you see the nature and the evolution of it, and where is it heading towards to actually?
Okay, that's a very nice question.
Yeah.
Actually, to be honest, I haven't really looked at the Southeast Asia using the REITs investing lens, lah. But if you were to ask me, right, I would say that if you look at REITs, they are essentially borrowing money to finance the properties.
Yeah.
And the reason why Singapore is doing so well in terms of the REITs and all that, right, is because we have a more we have a very good capital market. One thing. The other thing is that we are more politically stable as well. So when it comes to lending the money to the property developers or the REITs companies, right, we tend to have a lower cost of debt. But if you were to invest in maybe Southeast Asia countries like I don't know, Philippines or whatever, I do believe that they will be having higher cost of debt, and in return, right, I mean the REITs have to charge the tenants a higher kind of income, rental income, in order to give it back to the REIT investors, the unit holders.
Correct.
So in a way, it's not very what would say
Conducive, is that?
producive or conductive
Yeah.
for REITs to blossom there in the
Understand.
other regions.
Yeah, cost of
And
capital is higher lah because of the risk lah.
yeah, the cost of capital is higher. And if you
Understand.
talk about Malaysia, right, actually, I do know that a lot of Malaysia people, I mean our Malaysian investors, they also like to invest in Singapore REITs. I do know a few lah.
Yeah, yeah, yeah,
I
yeah,
think we have common friends.
yeah,
I don't
yeah,
mention names, but they in fact they asked me, hey, which REIT is good in Singapore, that kind of thing. Because of the currency also, like
yes,
if
yes,
they pump into Singapore REITs, they are actually earning if the currency appreciate from 3 to 3.5 times,
yeah.
you already make like easily how many percent already?
Yeah, easily 10 to 15%
10 to
extra.
15%.
Yeah,
On
yeah.
top of the dividend yield, right? Yeah.
Correct. Even though most yields of REITs in Singapore, in percentage to percentage wise, sometimes Malaysia offers higher, 7 to 9%.
Yeah.
Singapore on average is what, 6, 5, 6?
Yeah. Nowadays it's lower a bit.
Even lower. Wow. Okay.
Because of the higher cost of debt and
I
the
see.
increase
Oh
coming
yeah,
up.
because you guys raised interest rates a lot last year in Singapore. I
Yeah,
remember.
correct.
Yeah,
But
yeah.
still, I mean, on average, maybe 6%.
I
Yeah.
see. I
Still.
see. I
I
see.
mean,
Yeah.
capital more. I mean, the CICT also give around 5 point something to 6,
I see.
if I'm not wrong. Yeah.
Yeah, they trust the Singapore dollar better than the Malaysian ringgit lah. That's why. Okay, so moving on to Citrum, I think we did allude to this earlier. Can you briefly take us through roughly the business model, a very quick overview of the business model? What were the in a way it was a bit of a downturn. What was the catalyst that made it somewhat of a turnaround, if that would be a good word for it?
Okay. So like I mentioned previously, I've covered quite a few videos on Citrum. For those who know, they will know lah, because it's they have do their own research, right? Citrum is like they manufacture the yards and everything, the rigs, and it's more in the oil and gas sector.
Okay.
Predominantly lah, they are servicing the oil and gas industry.
Okay.
But like what you say, the catalyst or the turnaround going forward is that they are moving into the renewable energy space.
Okay.
And that, to me, when I compare it to Sembcorp Industries, that was also what catalyzed the share price for Sembcorp Industries. They went from $1 plus all the way to, I think, $5-6 now. So similarly, I do feel that Citrum is at that sweet spot right now, in the sense that because it's carved out from a merger of last time Sembcorp Marine and Keppel O&M. So the time it issued a lot of rights.
Wow.
Sentiment was very bad and everything, and so many of us, have bonus Citrum shares from other companies. Like for example, my wife owns Sembcorp. So she benefited from the share price that went up, right? But she also got Citrum shares. Then she keep asking me, hey, what should I do with the Citrum shares? Then I'm like, when I look at it, still okay lah. You don't sell it now, because right now it's like everyone is fearful. That's why the share price has went down so much.
I see.
And I do foresee that, because the management has also been very upfront about what they're gonna do, and they also have this kind of investor day presentation where they are aiming for a ROE of at least 10%. By 2028. So if you give them around 4 years, I mean, if you already have Citrum shares, then why you sell them when it's at the lowest, right?
Correct.
So just let it run until maybe 2028 and see whether the management is keeping their word or something like that. That's how I feel about it. Yeah.
especially if the shares was a bonus or was given for free. So
Yeah,
there's no cost to you, right?
yeah,
But
correct.
maybe from an angle of new investors who did not have the bonus share. So correct my understanding if it's wrong. It's like it was because I haven't studied any of these companies before, but based on what I've heard you say, they fabricate like ships or vessels that actually support the new energy solar wind turbine kind of installation.
Ah,
Is
yes.
that
Yeah,
it?
correct. Yeah.
And the monetization is more of contract value of the construction of these vessels and all these kind of things.
Mm.
I
Yep.
see. Okay, cool. Great. Now in your years of investing, could you probably share one or two examples of what you didn't expect to turn out well, but turn out well? Okay. And
Okay.
what you expected, you had a hunch, okay, this is going to work well, but turned out to be not so well.
Okay.
And what were the lessons learned in between?
Okay. There are two questions, right? So,
Yeah.
the first one was what I think didn't was, I mean, what I think was maybe subpar, but in the end they turned out well.
Yeah.
Okay. I think one example is Union Gas.
Okay.
I don't know whether you know about the stock.
No, no. What do
It's
they do? What's the business model?
Yeah, so actually it's a small cap stock.
Mm.
And they supply the pipe gas
Okay.
to all the so-called, the kopitiams, the food court.
Ah,
Yeah.
okay. Instead of the tongs or the
The
cylinders.
tank one, right?
Okay.
So actually, what sparked my interest for this company is that I somehow okay. So my grandmother, when I was back in before I shifted to my current house,
Okay.
when I'm still staying with my grandma, right, she always call the Union Gas and then, hey,
Okay.
I want to order one gas cylinder, right?
Okay.
Yeah, and they will come to our house and then change the gas cylinder for her, that kind of thing, right? So I'm like, is this company listed? Because I do quite a lot of scatterbug lah, scatterbug,
Mm.
and somehow one day, is this listed or not? Then I just went to search, and to my surprise, it's listed.
Okay.
But back then, I wasn't very sure that the stock price will do well lah,
Mm.
because like it's very boring business. Um, and I just keep it aside lah. But until back then was COVID.
Mm.
So actually I sort of like saw it again, because back then COVID, what I can only do is to go to the kopitiam nearby my house to tapao my food.
Mm.
So I'm like thinking of stock ideas, and then suddenly I see that the table I'm sitting there is actually supplied by the Union Gas, which they have a sticker label on the table.
I see.
Then like, is this like, I remember this listed. Then I went to do research, and I found that a lot of us have this misconception that it's actually supplying to consumers, like the
Mm.
households and all that.
Correct.
But actually, no, they are supplying mainly to the bulk of their revenue, right, is to all the business, those small, mom and pop stores
Yeah.
selling Thai fan, selling, the kopitiams lah. So I somewhat have maybe not much expectations on it, in the sense that quite boring ma.
Yeah.
Then I have some spare cash, and then I just invested in it lah.
Mm.
And then it went out. I think maybe 100%.
Wow.
Was I invested around 30 something cents, and it went up to $1 plus.
Wow.
Yeah, but it came down lah.
Okay.
I sort of exited quite late. I exited when it was around 80 something cents.
But it's still 1x, man.
Yeah, 1x. So that was a surprise for me.
Okay.
Yeah.
The one that was that you thought will be
Doing
great,
well.
but end up subpar.
Subpar. Okay. Maybe that will be a US stock. Okay. So I don't know if you have heard of this stock called Curiosity Stream.
Yes.
Oh, you heard of it before?
Yes.
Okay, so that was like a disaster for me. So back
Okay.
then, same thing lah, COVID, right? and then I was thinking, wow, all the US stocks going up, and what are some small cap stocks in US that I can exploit? So because I already done quite well, I mean reasonably well, in the Asia small cap space, right? I'm thinking like, hey, why not I hop onto the US small cap space? Wow, that was a terrible mistake because I'm looking at Curiosity Stream, and Curiosity Stream, if I mean the readers are not aware, right? It's actually doing documentaries.
Correct.
Yeah. And it's a streaming platform lah, so it's competitor to Disney Plus, Netflix, and one other. Okay, all the streaming platforms.
Even Net Geo and all that lah. In terms of documentary lah. Yeah. Right.
Documentary.
Yeah.
So and I saw Mr. Beast covering the Curiosity Stream back then. So that gives me confidence, like, even Mr. Beast can endorse them. So that was quite a big mistake, like in the sense that I thought that the I'm going into a bit of roses, but in the end it's a bit of thorns. Because what happened was that, when Netflix came out with their documentaries, it was so much better compared to theirs.
Correct.
And from what I see, they hit a wall in the sense that there wasn't enough growth in the subscribers. And even me myself, who tested their service for 1 year, I didn't renew after 1 year. So I realized that even if I want to be positive about the company, I myself is not using that service.
Correct.
So I so-called bite the bullet and then just sold it out. I think for quite a big loss, 50 to 70% loss. Yeah, because I thought that COVID, everyone stay at home.
Correct.
They will do very well. In the end, yeah.
Yeah. Wonderful. I mean, wonderful sharing from both ends of the spectrum. There's a phrase, James. I'm pretty sure you heard of this. If you're not humble, the market will humble you.
I'm not humble for the Curiosity Stream. That's why.
Yeah. Correct. So, next question is with regards to something that I realize we have a very close similarity to, which is actually investor tools. And now I realize when you were interviewing me and you were asking me about my tools, after reading your CV, I realized, no wonder. Because I'm very passionate about this kind of tools, because I realize these are things that retail investors have at their disposal but don't know how to use, don't even know how they exist, or don't even utilize them to the fullest potential. So you were a share investor. I was a share investor user, but then a lot of other guys came along, put it this way. for better pricing, for better coverage, and so
now you know why I am out of.
So you were a champion in a way, the champion for the Web Pro tools. Take us what you saw in the user landscape when you started, because when you're a champion, you're trying to sell the software. And at that point when you joined, and how has it evolved over time? And have the retail investors evolved as well, or is just the tools remain stagnant, retail investors evolve, or tools have changed but retail investors remain stagnant? I mean, I would really love to hear your point of view on that.
Yeah, I think this one is really up my alley, because okay, so I actually worked at Share Investor for I think 2.5 to 3 years, and I actually joined as the product lead for Share Investor Web Pro and also the station. So from what I can see is that back then, or maybe even before I joined, what the investors usually do is that they will do a lot of research. They will do due diligence whenever they want to invest. But along the years, right, came a lot of other better tools that is like you don't have to really look at the numbers. You can just look at the charts, the intuitive charts, and then see, okay, revenue is going up. In the sense that you don't need to look at, revenue this year is 100, the next year is 120, next year is 140. You don't have to look at the numbers itself.
You just need to look at the trend, right?
I just need to know the trend. So that's how the landscape has evolved. And
Mm.
a lot of users nowadays, they also invest using robo advisors. So in the
Mm.
sense that, I mean, if I don't have the time, especially in Singapore, a lot of us work OT. When you go back to, I mean, go back home, you have to take care of kids, take care of a lot of admin stuff. You wouldn't have the time to really sit down. Citrum good or not?
Yeah.
I go and log into Web Pro and see. I mean, mm, a lot of us wouldn't have really the time and the energy to do that, lah, so to speak. And this is a very clear trend that is
Mm.
happening. So that back then when I was still there, I see these two very obvious trends. One, people are going for robo advisors, automated investing, or you can just simply invest in the S&P 500 index.
Mm.
I mean, there's no reason for us to go and find this particular stock that's trading undervalued, but you don't even know how you can derive the intrinsic value and things like that. So people are not so savvy,
Mm.
and they don't mind because they are investing in the markets itself.
Mm.
Second thing is that there are better tools. I mean, share investor is still good
Mm.
for Singapore markets.
Correct.
Uh, but I do see that a lot of people are shifting to the US markets.
Mm.
So although Share Investor has a lot of Singapore centric data and they also cover a bit of US, a lot of other users are moving to other platforms that provide a more breadth of I would say features that encompasses all markets,
Mm.
which is, yeah, this is the two obvious trends that I saw lah back then. And I would say right now I'm using a lot of tools as well. So
Mm.
I'm using Simply Wall Street.
Mm.
I'm using Seeking Alpha as well. So
Mm.
I mean, I pay for these tools and I use them because I myself are also focusing on the US markets.
Correct.
Yeah, correct.
Correct. Correct. I see. No, it's interesting that, just to recap what you said, people lack of time.
Mm,
People want to do it for you kind of solution.
mm,
And, passive investing is obviously it's a growing trend, right?
yeah,
But at the same time, for active investors like us, it's the tools are somewhat indispensable. It's just that
mm,
how have certain of these tools actually evolved to suit needs. Like, you mentioned very interesting about trends, because
right.
you don't really mind whether it's 102.11 versus 104.11
Yeah.
million in revenue, right? I mean, like,
Yeah.
duh.
It's not that you cannot see the numbers.
Yes.
You're looking at the charts, but when you want to see the numbers, you can still, hover over and see the numbers.
Correct,
It's
correct,
just
correct,
that they know what the investors want. They want
correct.
pictures. Yeah.
Correct, correct. And in a way, how these companies position themselves? Do they position themselves as a media company, or do they position themselves as a tools for who company? Because
Yeah.
the marketing messaging will be very different. Because
Mm.
like you go to the retail investor, you tell them, "Oh, I have." It's like how Steve Jobs sold the iPod. He didn't tell you the size of the gigabytes, the size of the screen. He just says 1,000 songs, right? They don't care whether there is an A4 processor in it or how much memory. It just says, can I get 1,000 songs into that box there, right?
Yeah.
Okay, great. Um, what do you want in your own investment journey over the next 5 to 10, like you alluded to it earlier? You've looked at Asian small cap and then now moving towards US markets or
Mm.
perhaps even global. So where do you see yourself in your investment journey 5 to 10 years from now? And maybe add in a little bit of flavor of content creation, especially stock content, because there's always this contentious space where people look to YouTube for advice,
Yeah.
right?
Yeah.
But it's a very regulated industry. You have to be careful what you say and all that kind of thing. So maybe in your investment journey and like content creation, where do you see yourself 5 to 10 years from now?
Okay. Thanks. For my investment journey, I would say that I will be roughly half in maybe small cap space and half in the US stocks. So generally, I would say US stocks, I would invest in quality companies that don't really need my attention.
Mm,
Those that I park there, I know that 5 to 10 years down the road, they will be growing. Like Alphabet, that kind of company.
In Hokkien, we say "kam bat chiu pun ek kian."
Yeah, correct.
For those listeners who literal translation in Hokkien is close your eyes. Also, you don't need to worry.
Yeah, correct. So the other 50%, I mean, I was still, I mean, maybe it's my interest, my passion that whenever I spot these kind of companies that nobody is looking at. Maybe I can give one example.
Please.
Is the Sim Leisure. Uh,
Oh yeah. Oh wow. They've done very well.
Sim Leisure, like I think a lot of people don't know well. I mean, don't know this company well because they do theme parks, and the theme parks are very grounded or very kind of just water parks, right? It's very easy, and it's based in Malaysia. So
Yeah.
when they listed in Singapore, I will tell you whenever you tell this company, because I actually told a lot of my every time when I go to events, right, and I do webinars, and people ask me for ideas. Sim Leisure, Sim
Mm.
Leisure. I've spoken about this company quite a few times already,
But no one
but no one
took
really,
kid about it.
yeah, nobody came to me and, hey, what is this company doing? They just like maybe hear and then go in 1 year, go out the other year.
Oh, yeah.
Yeah, but when I see, or I mean, what I like about the company is that they are doing these theme parks, and once you build that, it's kind of the money just flowing by itself, and then they just need to build more theme parks, and they are exporting this concept to the Middle East countries. And
Mm,
also they are doing Kidzania in Singapore,
correct.
which I actually wanted to visit with my kids, do
Mm.
some research as well, and bring my kids to have fun at a win-win situation. Yeah, but yeah,
At the same time,
I
contributing to your investment holding.
yeah, correct. Yeah, so that is what I myself like, in the sense that I spot this kind of hidden gems lah. So 50-50 lah. One
Understand.
side is let it run, and the other side is my fuel my passion, that kind of thing.
Curiosity lah. Fuel your passion and
My
curiosity.
passion, yeah, correct.
Yeah. In terms of content creation, I mean, like in the space where in Singapore, there's a few of our common friends who create content. What do you think would be the landscape like in 5-10 years in terms of content creation, especially in the investment space where it's kind of regulated?
Yeah.
Yeah.
I think on this question, right, I will also say that, as much as I try to create a lot of content for local stocks, I mean, I do see that a lot of us are more interested in US stocks. And I would follow where the market is going. I mean, the crowd,
Mm,
the audience is going.
mm, mm, mm.
And I would say maybe in the near term, maybe 1 to 2 years, I will still continue on the local stocks, but I will also maybe gradually include more US stocks, and I will see how it goes. Right now,
Understand.
it's still quite open, but I'm trying to incorporate that in future lah.
Understand.
Because I don't want to just compete against the US.
Yeah, because there are a lot of
Content
very
creators.
smart guys there, man.
Yeah, they are like doing that, maybe doing one video every day kind of a speed,
Yeah.
as opposed to me. So I will still stick to my niche, what
Mhm.
I'm good at right now, which is local stocks. But I will slowly add on more US stocks going forward.
Understood. Okay. Now because of your focus on the Asian small cap equity
Mm.
space,
Mm.
what do you hope for that market? What are the things that you are hopeful that either can improve or either can propel it to be more vibrant, for the lack of vibrant in a good way, not vibrant in a bad way.
Yeah. So like what we shared, right, or what we discussed just now is that our local market is quite, quiet, delistings more than IPOs and all that kind of thing. So if I were to, I mean, my wish for the local market is, of course, have more IPOs, have more maybe bigger asset managers coming in, or even those, like maybe high net worth individuals, at least they show confidence in our local market. That
Mm,
will maybe help to trigger that you know interest in our local markets, and then help to drive up the valuations.
mm,
Um, yeah, that is what I would like to see. And on top of that, like maybe the Singapore government, doing some, like I think I read an article in the Age markets before. If they were to just pump in 3%
mm,
from GIC,
mm.
that will just capitalize the whole market, man. Yeah,
Actually, that's what Malaysia is doing right now. They're
yeah,
bringing back a lot
EPF,
of,
right?
yeah, pullback from our sovereign fund, right? They just pull back and put more into the Malaysian market space. So that's what you're seeing.
Yeah.
The the for the lack of a better word, pump priming.
But that is very true. I mean, if you as the government you don't support your own country,
Yeah,
then why would the other overseas fund managers invest
correct,
in our
correct,
country?
correct, correct.
Yeah, so,
Exactly,
that
exactly.
is the
Yeah,
thing, lah. Yeah.
I understand. Okay, last question, James. It's been interesting, a very interesting conversation. What would you have wished you would have done better when you were younger? Now, looking back, that's why I asked. I started off with Dota. You could have been an esports champion, man, winning millions of dollars, kind of thing. You
No,
never
I
know,
don't think so.
but looking back, maybe either from an investing lens or an entrepreneurial lens, what would you have done better when you were younger?
I think in terms of both, right, I wish I would have started earlier.
Mm,
But I mean, I can't complain lah, because what led me on this entrepreneur journey is actually COVID. Back then,
mm,
I have two kids, right? So I'm still in the mindset of just having a monthly income to give them a better life, that kind of a mentality. But what COVID really triggered me is that, you know, even if I continue working in the finance space, be would I spend enough time with them, that kind of thing? Would I
mm.
be there for them? And kids, they always say that kids grow up very fast, and by the time you have time, really, you want to play with them, they won't want to play with you. Really, they grow up
Correct,
and they have their own friends and everything.
correct.
So that was what actually led me to, become a. I'm not really, like financially free, that kind, but I'm trying to embark on the journey of entrepreneurship to spend time more with my family. At the same time, also explore what I like about,
Mm,
doing investing and content creation, because this is, I mean, even if I don't do any YouTube videos, I will still conduct the same research. So why
correct.
not? Just share with everyone using YouTube. And for investing wise, I wouldn't have gone into the small mid cap space in US. That is definitely. I've learned my lesson.
But you wouldn't, if you have never gone in, you wouldn't have learned that lesson as well, right? You had
Yeah,
someone
correct.
had to go through the experience.
I mean, I made a lot of mistakes lah
Yeah.
since I started. So I started speculating, which was terrible. I,
Mm.
s- I went into forex,
Mm.
FX trading, crypto trading. I mean, whatever instruments you mentioned, I've tried it before, and I sort of like tried everything, and then realized that okay, small cap stocks is for me.
Mm.
US, those quality stocks with modes, economic modes, and everything is for me.
Mm.
That was how I have evolved throughout time. But I definitely wish that I wouldn't have spent so much time and wasted so much money to reach this stage lah.
But that's what we call tuition fees, man, James, right?
It's too expensive.
Everyone has to pay their dues.
Yeah, but
James,
luckily, yeah.
thank you so much for the insights you shared. I'm rooting for your success because, in a way, we both have very, very similar paths, right?
Mm.
And I look forward to seeing you, growing your channel, putting out that content for people. So, thank you so much for being a gracious guest. And yeah, for listeners out there, if you want to follow James, he has a YouTube channel called Investkaki. I'll leave the links in the comments, the links in the comments below. And if you enjoyed this podcast, give this video a like, share and subscribe, so that you can help content creators like both James and myself to actually grow this community for the betterment of all of us, right? Thank you.
Thank you, John. Thank you.